All right, so we had another very interesting week in the markets. The stock market, specifically the S&P, hit another new all-time high. I don't know if it was an all-time high, but it was a weekly high close. So that's good news. The PCE also came out on Friday. The core PCE index, which strips out food and energy costs, is closely watched by the central bank. Lost 0.3% from the prior month during October, in line with expectations, and basically the same from September. So PCE is lower than the CPI. Inflation definitely is still concerning, at least in the States. Other areas, maybe not necessarily. But when you look at inflation, it's looking like we're probably less likely to get, we for sure, the likelihood of the amount of cuts that are priced in over the next year, that number is going to come. It already has came down, but if anything, it's probably going to come down further because it's not looking like, barring a recession, but if we're going to get a recession, it's probably not until second or third quarter of 2025, if not later. So over the next half a year, or at least 1 or 2 quarters, it's unlikely we're going to see any major correction in the stock market. If you look at the stock market from this past week, it was a similar trend to the week before, in that small caps and mid caps outperformed. The growth side of the market underperformed. The equal weight S&P did better than the regular S&P, which also did better than the NASDAQ, which did better than the Meg 7. So that's a trend that is going to be interesting to follow. I kind of still like that trend. I still like that trend for sure, because if you look at the areas of the market that are the most overstretched, it's the growth side of the market. It's especially the large cap growth side of the market. That's where the market is the most overpriced. There's still a lot of value in the smaller and the mid, especially the mid cap. The mid cap area is the area that I like the most, because you get more well-established companies, but they're not massive, like they're not worth hundreds of billions or trillions of dollars, which is going to make it harder for them to continue the amount of growth they've had in the past in the future. So that's the area of the market that I like the most going forward. I still think that the near-term trend for stocks is still up, because we're going to need a catalyst to get a major correction. Now, we could easily get a 5-10% correction without any major catalyst, but that's nothing to be concerned about. Honestly, virtually not. Aside from like literal nuclear war, that's the only thing that I would be overly concerned about long term. And there definitely is a chance of that, but there's been a chance of that going back 50, 60 years. So nothing over the short term I'm super concerned about. I think there is a decent possibility of a more, maybe a 20 or 25% pullback, maybe middle to later of 25. But that's too far away to know. And I think that the near-term trend definitely still is up. Bitcoin has basically trended sideways over the last week or two. And I think this is just a consolidation until the next uptrend. I'd be surprised if we see a major correction. Again, that's just me. I think that we still have a long ways to go for this bull run. I think this is just the beginning of it. This is a common thing you hear from people that are trying to criticize or critique Bitcoin. Another version of this chart on the same scale: if Bitcoin is going to 13 million, where's the QQQ going? If you answer there that both moon. That also means all stocks moon. The massive amount of financial wealth will cause hyperinflation. You cannot create hundreds of trillions of wealth without prices hyperinflating. Or do you expect TradFi assets to collapse as Bitcoin goes to 30 million, keeping overall wealth at reasonable levels? So this is an argument you constantly hear from people. It's like Bitcoin is just a QQQ with leverage, and it's like if the NASDAQ would have tracked Bitcoin over the last, let's say, 5 years, Bitcoin is up almost 10x, roughly 10x. It's roughly 10x because you go back to the summer of, go back to 2019. It was well below 10,000. So we're looking at roughly a 10x over the last 5 years. And if we look at the NASDAQ, well, the NASDAQ hasn't gone up nearly that much. If I pull it up here, the NASDAQ has gone up 122% in the last 5 years. So Bitcoin is roughly 10x'd the NASDAQ over the last 5 years. So what would make you think that they're going to track one for one? And this is just such a poorly thought out argument that, like, are you even looking at the history? And yeah, they're showing this chart here, but they're not the same, right? They're not the same. This is the what, the 3x or the 5x? I think it's the 3x NASDAQ, but that's not a fair comparison, because when you look at leveraged ETFs only work true to scale over a short period of time. And if we look that up, right, let's just look that up just out of curiosity here. I'm going to look up the leverage. So if I look up TQQQ, which is the 3x NASDAQ ETF, it's up about 300%. So it's definitely providing leveraged returns, but you're only getting about 2.5. You're not getting the full 3x. So that's another thing to point out. Leveraged ETFs do not provide exactly 3x if you were to buy and hold over a long period of time. And this is something that you would expect someone who's a quote-unquote professional to know, given I'm an amateur and I know that. So that's just not a good argument. Personally, do I think Bitcoin's going to 13 million? Eventually, at some point, yes. But is it going to happen as soon as Michael Saylor, I think is who he's referring to here, says? Probably not, but I think it's certainly possible. I think it's certainly possible. But this idea that Bitcoin is just leveraged NASDAQ, why are you only going back? I mean, honestly, like, it really only tracks well, basically, starting in 2021. So you only have 3 years of data based off an asset that's been around for 15 years. Like, to me, it's just too much of a cherry pick. Like, the most charitable way I can put it is this is a cherry pick comparison. The most out on the limb I would go is saying you're just outright lying and trying to mislead people. The next thing here from Lynn Alden, at what point do people stop comparing a 3-year bubble to a 15-year structural adoption pattern? And I'm not sure if she's referring to the tulip bubble or what exactly, because I believe the tulip bubble was less than 3 years, but I'm not actually sure exactly what she's referring to. But long story short here, calling Bitcoin a bubble, like, this is the big question for these people. Like, what other asset can you think of that was in a bubble for over 15 years, like 2 decades? Like, I'm sure there was something, but there must be a point to where you're forced to admit you're wrong. And this is the big question for these people. Anybody saying that Bitcoin is a bubble, if they're not acknowledging this is under these circumstances, I will admit I'm wrong, and they're actually reasonable, if they don't do that, then they should be dismissed. And this also brings me to a point that I brought up a million times, but I think it's very important because there's not enough people within the Bitcoin space that talk about it. And it's what I call the I don't want to admit I'm wrong factor. And a lot of people don't factor that in because they point out the inevitable Bitcoin adoption is going to continue to skyrocket. But I don't think they factor in the I don't want to admit I'm wrong factor. And I don't think enough people realize that there's a lot of people out there that quite literally would rather, like, this is maybe a bit of an exaggeration, but there is certainly people that would quite literally rather be homeless or never be able to buy a home or have to work till the day they die than simply buy some Bitcoin. Like, there is a lot of people like that. I've said the number is, honestly, to some degree, there's a lot, there's a lot inside me that tempts me to say that it's literally the majority of the population. I don't know if it is or not, but either way, even if it isn't, it's a significant minority. So I think it's insane to suggest that the majority of the population, I could see it happening. I'm not ruling it out, but my base case is the majority of the population is not going to adopt Bitcoin, and that includes a lot of the financial advisors and asset managers and you name it. my base case has always been maybe 20, 30, 40% will. Uh, and a lot of those will come only because, number one, the average person's they're gonna know someone or multiple people that got rich or retired at 40 years old because they just bought some Bitcoin, or they're gonna see like, hey, like my cousin bought Bitcoin. I'm paying 200 basis points for these stupid mutual funds. Like, why would I keep doing that when I could just put my money in Bitcoin, pay less, and get better returns? Like, eventually there's going to be people that do that. Like, a lot of people are going to realize that. And then there's also going to be financial advisors that are like, hey, I can get way better returns for my clients, or I can continue to get these mediocre returns and risk losing them. Like, there's going to be some people that some of these guys that get their heads out of their you-know-whats. Like, that's going to happen. But I don't think it's going to be as many people as a lot of the real hardcore Bitcoiners say, just because people just do not like admitting they're wrong, and the extents that they're willing to go to not admit they're wrong is staggering. Like, it's just staggering. The last thing I wanted to touch on here is the mock portfolio. I've been doing fairly good in this. I wanted to bring this up just because we're getting close to the end of the year, and I have outperformed the S&P actually by almost exactly 4%, which is good. I would take that any day of the year. I mean, if you could guaranteed outperform the S&P by 4%, I don't know anyone who wouldn't take that. I mean, other than like literally the best of the best traders. So I'm quite happy with this so far. And people are probably wondering, why did you outperform the S&P? And I don't think it's because of the stocks that I bought. I mean, I've done really good with EQB, with MSCI, with QLYS. I'm up quite a bit with Paycom Software. Domino's, I'm up nicely. Manhattan Associates, I'm up nicely. But there's some that I haven't really done that great either. So I don't think it's necessarily the stocks. I think I've done a decent job with the stocks. I think that the main reason is the options. And this is what I've said time and time again, that an easy way to increase your returns is through options. And whether it's covered calls or cash secured puts, this is an easy way. I mean, not easy, because it would be hard for the average person that doesn't understand options, which is the vast majority of the people. But you don't have to be a genius whatsoever. If you want to do fancy like butterfly trades and those kind of things, if you want to trade options, that's quite confusing. Maybe not confusing, but there definitely is a learning curve. If you're talking about covered calls and cash secured puts, that is very easy, very, very easy, especially because when you look at, at least Interactive Brokers, when you're going to sell a call or a put, they'll give you the percentage, at least based on the volatility, the likelihood that you're going to make money. So you can tell quite easily, hey, this is the likelihood of me making money. I have a 90% chance of making money on this. I have a 80% chance or whatever. So it's actually quite easy when it comes to covered calls and cash secured puts. And especially doing it in a mock account, that's the easiest way to learn how to do it, because there isn't real money on the line. All you're doing is you're gaining valuable experience. And this is exactly why I use this account, because I'm building up my actual accounts with real money. And I think one day there's going to be millions of dollars in there. And when there is millions of dollars in there, I want to know, and I want to have a lot of experience doing this already. Like, to be quite honest, this is the portfolio that I manage the most actively, because I want that experience. The more experience you get, the easier things will be. So anyway, that's what I wanted to bring up today. If you liked the video, please like, comment, subscribe. Really appreciate all that, and stay tuned for more.